did you know that if you have an existing mortgage and have come across some cash, you can actually lower your monthly payment? So that's what we're going to talk about today. Welcome back into the podcast. My name is Ken Angst, team leader of the Angst Real Estate team. Our goal of our podcast is very simple, is to educate people in Northern Nevada about what's going on here and all the different options to buy, sell, and invest in real estate. If you like our videos, please subscribe, like. We have lots of great content coming out, and if you find this video useful, please share it with people you know. So we're joined with Brian Cushing, Essex Mortgage. Brian.
Ken the Realtor.
Realtor, town Realtor. My mom says, where's the number one? But we're working on that status. But today, Brian, we're talking about an important option out there. If you have an existing mortgage and come across some cash after a sale of a home, or you get some inheritance, to bring down your monthly payment. So
existing mortgage payment. Even if you still have a 3% loan, you can do this.
Yeah. So what is it called, and how does it work?
The general way you refer to it is recasting the loan, but every loan is amortized, so it's really re-amortizing the loan. That just means it starts off as a 30-year loan. If you're 28 years left on the loan, so you're 2 years in, you can put in a large amount of cash. Let's say it's at least $10,000, but say it's $100,000. You go through the process with the mortgage company, and you can re-amortize, maintaining that 28-year remaining life, and lower your payment. So now you're still paying the same interest rate, you're just paying a different amount of interest and principal each month.
Yeah, so it's a great option for people out there. Maybe not if you have a 3% mortgage.
I don't think that's a very good use of your money.
Yeah, so make sure you talk to your financial advisor or someone like Brian, and make sure it's something that makes sense. Don't just go do this because you saw it here. Make sure it makes sense. It makes a lot of sense for people in this environment that are getting a 7% mortgage.
Yeah, use it as a tool.
Yeah, use it as a tool that come in, they get a mortgage, they sell a house or come into some money, and they want to put money down to lower their monthly payment. So.
Or you could use it as a strategy, like you need to sell your house, but you don't really want to have a contingency, or you don't want to be forced to move overnight into another home. If you can afford, say, a 10% down payment on a new house, even though you might have 50% down from the sale of your home, you could put that 10% down, pay the mortgage insurance, pay the current interest rate, and if the interest rates aren't any lower when you do sell your house in a month or two, and you get the funding, then you can put that in, re-amortize your loan payment down to the 50% you wanted to start at, and then get rid of your mortgage insurance.
All right. So how does it work though? So how do people know if their mortgage has it? So how does it?
Well, talk to your lender and make sure that they offer that. So first things first is you got to make sure that there's a recast option with the servicer. Fannie Mae and Freddie Mac manage, they own a lot of the mortgages. More than half of the mortgages are backed by them. So Fannie Mae and Freddie Mac don't mind you doing this, but the servicer manages that. So whoever is managing the loan payments, you need to know about that ahead of time. And it's a good question to ask your mortgage lender.
How much does it cost?
Some lenders charge a fee, others don't. I'd say it costs less than $500, which is a heck of a lot better than trying to refinance. But if the interest rates were lower, of course you could take advantage of that too.
Yeah. So, and then is there a one-time thing on average, or can you do it multiple times, or what is the deal?
I don't think I would do it more than once a year. Again, that's going to be a servicer thing. If the servicer says you can do it, multiple times per year, I don't. It's a lot of paperwork and extra, steps to send a $100,000 check, or, $10,000 every 6 months or something like that. Try to do it once a year. So if you get a big bonus, you have a family member that passes and you get an inheritance, that's one way that this could happen. Or as a tool in purchasing another home, just knowing it exists is a good conversation starter to get you the best option and hopefully the best home and not lose out due to a contingent sale.
Right. So we just want to inform you that this is out there. We have other videos about downsizing, all the different options, bridge loans. So take a look at those. If you have questions, how do they get a hold of you, Brian?
They can call our text 775-453-0345 or visit my website, homeloansreno.com.
And you can also direct message us, text us to 775-525-0309. Like our videos, like I said, we have a lot more content coming out over the summer. So till next time, you guys enjoy this nicer weather and start planning those family barbecues for the summer. Take care. Thanks.